Hey guys, so I want to take a look at a coin that I haven't done a video on yet. That coin is Aptos. The ticker for this is APT, and I'm currently on the weekly time frame. Before I get into the analysis, though, I should mention that if you're not subscribed and you want to be able to find this channel again in the future, you should click subscribe, click the bell, and then click on all, so you actually get notified when I release new analysis videos. I'm going to be doing about 2 or 3 videos every single day. And yeah, because this is a small channel, we're not really prioritizing the search algorithm, right? So yeah, if you find this analysis helpful, just click subscribe. That way you can get access to my other videos that I put out. Okay, so as you can see here, this is pretty interesting price action. So we have this downsloping level of resistance that has been kind of like pushing the price around since the start of the year, right? Since January. And right now, okay, so I drew this line from the wicks, right? So from these upper wicks right here, these wicks right here, this wick right here. And now if you notice what's happening, for the first time in about 7 months or 8 months or so, we just closed a candle body, a daily candle body above this downsloping level of resistance. And of course, the wick shot right up until this resistance level right here. So right now, it's kind of like we're at an indecision point where the price is between this former level of resistance, and now the bulls are going to try and defend this level as a support, and this horizontal level of resistance. So if you're going to trade Aptos, I highly recommend that you draw this zone right here. So you can start it. I would start it right below these two candle bodies, and then just carry it down until the top of these two candle bodies right here. That's the resistance zone, right? So you see, like, the wick will come through, but by the time the daily candle closes, it gets sold right off, right? So your cue that the bulls are kind of taking control here will be if the price comes up and a candle body closes above the top of this range, okay? That would be a very, very bullish sign, and I personally might look to take a long in that situation. So I'm going to switch the time frame here. So let's see what's going on the 4-hour. And yeah, so this is the level, this downsloping level of resistance has now flipped to support. And this is the level that's being defended. So I do not want to see a daily candle body close back below this level, right? If we could hold this level, it'll probably just kind of base out for a little bit. Maybe it'll come back and just retest it on the downside here. But what I want to see is this level hold. And then if this level holds, the next target is obviously back up to this level of resistance where we just got rejected, right? So this level we're currently at is about $7.36. And that's the start of this resistance level is $7.84. Okay, so these are the levels on this short time frame here. I want to change the chart, and I want to show you just exactly where we found support on the macro, right? So I'm going to switch the chart here, and I want to take a Fibonacci, and I'm going to run it from the bottom up to the top. And guys, so you know, I'm using the log scale. And when you use the Fibonacci, there's a setting. So if you right click it, there's a setting, and you have to, if you want the same fibs as me, you basically have to click the box that says fibs for log scale, right? In the settings menu of the Fibonacci. So I'm going to run it from the bottom up to the top, and look how well the price has responded to these levels all the way down. Okay, so the first 23.6, I don't pay attention to it. The first level I look for support is 38.2, and you'll see we bounced off of it twice, right? But when we lost this level, the next level is almost like a magnet. We came right down to the 50, bounced off the 50 twice. Next level, again, like a magnet, once we broke through this, down to the 618. We came to this zone right in the middle of this golden pocket range, the 61.8 and the 65%. For about a week, we were just in this zone, and the candle bodies consistently closed above this 65, right? Once we broke out of here, we came up, we got rejected at this former level of support. Broken support is then resistance. So we got slammed all the way back down, and this could potentially be a double bottom, but we need to break this level. And this level here is pretty much the level that I just drew on here, right? So now that you see, like, basically we came all the way down to the golden pocket region. If this level breaks, I would think it's going to come all the way back down to $4.67. Hopefully that doesn't happen. I don't think that's going to happen. I do think, based on what we're seeing, this break of the long-term downsloping resistance right here, that I think the bottom might be in for this asset. Hopefully. So I'm going to get rid of this. And now what you see, I have these lines kind of drawn, these horizontal lines drawn on a chart. The way I got these lines is I took my fib tool again, and this time instead of running it from the bottom to the top, I went from the top down to the bottom, right? So just click and drag, swing high to swing low, and this gives me these projections. And what I'm looking for, I mentioned this is in pretty much every one of my videos, upside targets, and I want to see where does the Fibonacci retracement line up with the price action. So I always want to look left, and I want to see confluence, right? So the first level I would look to is this 382, and again, that's if we break this range right here. This is the key range. If we start closing daily candles above this, again, that level is $7.93. Then the next level I'm going to look to is this 382, which is $8.92. Okay. And if I look left at this first fib, the 38.2, I'm going to see that this level does have confluence with the price action. So you see it was support here for a little while. We broke below it. We came back up and it served as resistance, right? This right here is a deviation. So what I would do for a resistance in this case, I would take the the rectangle tool, and I would start it from the 38.2, and I would make it a range up to the top of this candle body. Okay, so that would be my first level of resistance, because keep in mind, a wick can come up here, the price can come up here. So this is really the level. It's a range, right? So if this level breaks, the next level I'm going to look to is the 50% retracement. And as you can see, I have a lot of confluence with the price action at this level as well. You see, this was the this 50%. We have support right here. And then that, just like down here, it flipped to resistance right after. So this again would be the next level I would look to. And I have that around $10.50. $10.50. And again, this can be drawn as a range up to $10.78. So right here. If this level breaks, the next level right here, and I have perfect price confluence at this golden pocket region. So remember, I just showed you from the bottom to the top, this golden pocket served as the level of support. This is what we're potentially making the double bottom off of. And I expect this level on the upside is going to be strong level of resistance as well, right? And if you look, it's just like how it lines up with the price action. So it was resistance right here, came up to the 65, it was resistance right here. So yeah, just a lot of history around this level. If the price comes back up here, I would look for a lot of sellers to come into the market and try to smash it back down, okay? In my last video that I did, I mentioned that obviously if we're kind of climbing up this staircase here, the Fibonacci staircase, then it's going to be an uptrend, right? So if I'm going to look to enter short positions, the first criteria is it's got to be the first touch. The first time it comes to the level, I feel like, okay, seller's going to come in. There's likely going to be a little bit of a sell-off, right? And what I can do, I can look for like a doji or some sort of like bearish looking candle. And then I would just enter a short and place my stop loss just above the level that I've marked out here, right? And on the downside, since it's a counter trend trade, I'm not going to be, I'm not going to expect the price to come all the way back down here. I'm going to be very conservative with my target, right? So I'm still going to try and target, a 1-to-3, a 1-to-2 risk reward ratio, but maybe I'll look, say for example, if I'm shorting right here, I'll look to take profits right here and I'll place my stop right here. So it's still very conservative on both sides, conservative stop loss and conservative take profit, right? And then obviously the second and third time it comes up to test it, I'm not shorting at all, right? What I will look to then is I will look for this to break, and then I'll look for a long all the way up to the next range. But yeah, overall, this looks really promising. Yeah, I wouldn't get too excited unless this level breaks. So this level breaks, daily close above here. That's when I'll look to a long, and I'll place my stop loss just below this region. And then, yeah, I'll target the upper ranges that I just mentioned on here. These are my targets to the upside. But overall, Aptos looks really good. Just pay attention, draw these lines on your chart. And this is the trading range right now. This downsloping level of resistance, look for this to be support, and look for this range here to be the resistance level, right? And I imagine the price is just going to kind of consolidate within this range for a little bit. And that's what we want to see. And then eventually I'm looking for the break. What I don't want to see again is the daily candle close back below this resistance line. That's going to be annoying for everyone holding Aptos. Okay, guys, that about wraps it up. And once again, if you're not subscribed and you found this helpful, click subscribe, click the bell, and then click on all. And the exchange that I'm using, I put a link to it in the pinned comment and the description. And I noticed, like right now I'm in Canada. I'm just visiting family. Normally I live in Asia. And they're saying that I'm not able to access it from Canada anymore. But the solution is, you could just theoretically use a VPN. And I gotta say, UAE is very crypto friendly, and none of these exchanges block that location. And obviously, with the VPN, you can just change your location, your IP address, right? So I reached out to a VPN network, and I got a discount code. So not a discount code, but I got a discount through the link below in the pinned comment if you want to trade on these exchanges. And the one I'm using has no KYC, which is awesome. Okay, guys, that about wraps it up. Take care. Have a good evening. Bye.